It is tariff day today. We actually haven't gotten any news about that yet, but risk on assets are on the move. We're going to take a look at that, and then we're going to finish out this video talking a little bit about the history of gold and what we could be expecting in the near future related to that. This is going to be a bit of a quick one, but first of all, you can see my chart looks a little bit different today. So I've been using this Red K D Vespa version 1 volume visualizer the last few days. I've been enjoying that. It's been helping me visualize the volume a little bit better than just the regular volume bars. I'm a very visual person, so I'm always kind of constantly searching for indicators that provide me better, visual cues for information. That's really all it is. That's why my chart keeps changing all the time. I'm always looking for well, what if I like this one better? And what if this visualizes it in a way that's easier for me? And I've been enjoying this right now. If you want to know which indicator it is this one right here. We go red K. It's going to be the directional volume estimate from price action. Now it also has, it has a volume weighted version as well, which I don't mind. It's nice. It kind of gives you a better indication of how the current volume weighted volume is weighting the movement of the price right now. But like you can see, it kind of gets all over the place and you got to like move it around. So I turn it off just so I can keep it centered, and I just like it better that way. Anyways, let's get into here real quick. So clean spark, we've had 2 days so far positive. We're coming up over the 9 EMA. That's an important EMA. We get above that and hold above that, we could move up to the 50 at 889. And if we reject off of that, we're coming back to the low. So keep that in mind. Clean spark warrants, these got dicey. So these came all the way down to 15 cents 2 days ago. We had some pretty significant buying volume the day after, though. So we had big volume on March 25th, right, or 28th, sorry, and then came in and we're getting some big buy volumes. So this big green bar here on the April 1st, that interests me a lot. And also you can see on the visualizer here, volume, negative volume is weakening. You can also see that on the BX trender. So together that is showing that they are doing that. This could be potentially a signal of the bottom, and the fact that we came all the way back down to the bottom of this thing, that's crazy. Whew. It even went lower than where I bought it originally. So I'm deep in the red on this right now, but I am seeing some light at the end of the tunnel on that as well. So what else is going on? I did start dipping my toes into Core Z. So we're getting a break of this yellow line here. We've broken it before and fallen, but I dipped my toes. I bought a small nibbly position on Core Z yesterday. I'm expecting it to break out of this channel and at least come up to maybe $10. I want to see is this gap. What I want to see ultimately is this gap fill up to like $16. That's what I'm looking for there. Anyways, so basically we're moving back to risk on. That's great. You can see Bit Farms, that came down into the 70s. That sucks. Bit Digital dipped briefly under $2. I'm just kind of marking that in my mind there, that those had gotten to those levels and mentioning it here. You can see Mara's got a nice big engulfing candle today. Mara's might be ready to break out. Honestly, Mara might be, but you can see that the volume here on the volume visualizer is still pretty dark red, even though the BX trender is showing light green there. I would want to see I would want to see this at least turn gray before I'd be interested in Mara, and I want to see it break this yellow line and go up here, and maybe if we're lucky, hit that 50-day moving average and cross it pretty soon. What else have I been picking up on? I've been picking up personally Tesla. I've been looking at Tesla. I think Tesla, oh yes, I mentioned this before, and this is happening now. Elon is going to be leaving Doge in May, apparently. So this is what he has said. We'll see if it happens in May or not, but Elon has announced that he will be leaving Doge in May, and this is what I was waiting for, that turn, leaving his position in Doge, saying that he's done his job there and he's going back to running his companies like Tesla and SpaceX. All right, so Tesla, I have been nibbling on some Tesla with the expectation of the return of Elon, and with that return, I'm expecting it to make up, come back up into the 300s, maybe even 400s again. And you can see that right now we're working on a bit of a bull flag. All we need to do is break that upper trend there, come up, hit the 50-day moving average, maybe go back and forth there for a minute, and then break that 50-day moving average. And once we've done that, and away we go on Tesla. I've also been picking up some SoFi. That's another thing I've been buying here. Down, I sold. So I bought SoFi, I sold at like 13, and then I started buying again at 11.50 yesterday. I'm expecting this to end up being a bit of a double bottom and maybe a move up to $16 or $17. That's what I'm looking for on SoFi. That may or may not happen. We'll see. And of course, nothing I say is financial advice and not a suggestion to buy, sell, or hold any asset whatsoever. Just my thoughts, my opinions of these charts as I look at them. Okay. And that is pretty much what I've been up to. I sold some puts on RCAT because drone technology kind of is the future of aerial warfare. And yeah, I sold some puts on RCAT a couple of days ago, and those I bought back for 80% profit this morning. I wanted to sell another one right away because this is looking really good. Let me show you this scoop cup and handle is looking really good for a move all the way back up to like maybe 850 or so. But I want to see if it's going to hold that 50-day moving average or not today and tomorrow. And if so, then I can sell some more puts, maybe even some in the money puts around 750 or so, and see if it can't get back up to that like $8 level in the next couple of weeks. That's what I'm thinking about. I haven't done it yet, but I'm still looking at it, thinking about it. So it looks like we're getting back to risk on assets. That is an exciting thing, an exciting time for that. Now, let's talk a little bit about gold. All right, so gold. This is the chart of gold. All right, now let's go back in here. Let's have ChatGPT help us here. So when was the first time that the United States revalued its gold? Remember, that's what we're talking about right now. We're talking about a potential revaluing of the U.S. gold, the Treasury. All right. They've done this a couple times before, and let's see what happened then when they did it. So the first time was in 1934 when they revalued it from $20 per ounce to $35 per ounce. So that was 1934, correct? Yes, 1934. So we'll go from 1930 to 1939. All right. Now you can see there was a big dump afterwards. But so what was the value of gold at that time? Look at this. Is this in today's dollars or is this log scale show recessions inflation adjusted? So this is inflation adjusted. Inflation adjusted. I want to know exactly what it was. Okay, so they raised it to the current value, right? So we were 1933, it was worth $26. 1934, it spiked up to $35 an ounce, and they raised it to the current value of gold. Okay, it stayed at $35 an ounce and continued to go down a little bit. Let's drag into it. So it stayed at that value and then came down over time. Or did it? Was that just the recessionary one? I don't know. Let's find out now. Now we got to zoom out. Let's see, how did it look? Yeah, it stayed flat at about that $35 level up until 1970 when it went up to 36, and then 1971 it went up to 39. That's when it got revalued again, right? In 1971 they moved it to so they ended 1971 they ended the gold standard. Gold was revalued in 1972 to $38. Okay, 1972 to $38. So let's go ahead and scroll over here. 1972 to $38. Okay, 1972 right here. So gold not in so in 1972 at the beginning of the year it was $48 at the beginning of 1972. They revalued it to $38. All right. Okay. So they put it basically $10 below ish, about $10 just below the value of spot gold. And just in 1970, in the next 2 years, it went up to $172 per ounce. And by the end of the decade, it was trading at $600 per ounce. And that is where, let's see, and then in 1973, it went up, they revalued it up to $42 an ounce. And you can see that was the beginning of the 1973. The value was at $74, so they gave it about little more than half the current value of the spot gold, because I'm assuming they assumed that it had ran up so high so fast that they didn't want to end up revaluing it and then have it fall and then have their gold valued at more than the current value of gold was. Okay, anyways, and through the decade, look at that. It went from, at the beginning of the decade, in 1971, it went from $40 all the way up to $665 per ounce after that revaluing of US gold. So now we're talking about doing that again right now. And what is the current value of gold right now? Well, the current value of gold is 3,100. So what would be a safe area we think that they might revalue it to? I'd say probably somewhere around here, maybe $1,500 or so, maybe $2,000 an ounce. And if they revalue the US gold to $2,000 per ounce, what do we think is going to happen to the value of gold in the next year, the next 5 years? Probably going to see that significantly increase. And remember, last time it went from about $40 an ounce all the way up to $600 an ounce, more than a 6x. If that were to do that this time, that would be significant amounts of money. We're talking about over nearly $20,000 per ounce. Now, is that going to happen? I don't know. Who's to say? But that is being floated as an idea for eliminating U.S. debt. And that would, I mean, it would basically would do it if that were to happen. They were to revalue it to $2,000 an ounce. And then if over the next 3 to 5 to 10 years even, I mean, this is the long game, maybe, 10, 15 years, that value reaches $20,000, they could revalue it again at, $7, $8, $10, $15,000, something lower than the current price, and that wipes out the debt. That's what they are thinking. That's what they're considering doing. And there is precedent for this because, and remember, back in the 70s, we started the decade at $36 an ounce, ended the decade at, let's go here, ended the decade around $700 an ounce nearly. So we're talking more than a 10x in the value there. Now it did taper off after doing that. It did taper off and eventually came down to $250 an ounce again. And we could see that, which is why it came all the way back down to $256 an ounce before carrying on higher again, which is why I'd say from this current spike, maybe a safe area would be $1,000 an ounce or maybe $1,500 an ounce, somewhere to give gold room to come back down to this dip here, at least this dip that we had in 2021, that area, right? Come back down to that flag area, give it that much room. I'm assuming they're going to be that responsible. I would hope that they're going to be that responsible. We'll see. But anyways, it looks like we're moving back to risk on. Today is going to be a lot of tariff news, so keep your eyes on the news. And anyways, that's all I got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description, as well as the channel bio, and have a profitable day.